Jennifer, good morning. It's good to see you. It was a good
morning.
quarter.
Great to see you too, Deidre.
I want to dig into some of the commentary on the call. You guys talked about seeing some duration extension for larger deals. Could you give us a little bit more color? What kind of budget scrutiny are you guys seeing at the moment?
Sure. Well, we continued to execute really well in the quarter. I'm really proud of the results that we delivered. Growth up 34%. This is our fourth quarter at or above 32% growth with significant operating margin improvements. We were up 1,000 basis points year over year. And we're really committed around our path to profitability. We expect to be profitable for Q4 this year and for the full year next year, FY24. From a macro perspective, we saw a few things. One, incident response continues to be a very important priority for our customers, not dissimilar to security, with most business moving to digital assets online, your mobile app, et cetera. We see our customers really needing to make sure that those customer experiences go well, and so they continue to invest in there. So while we did see some larger deals slow down and some additional scrutiny on deals in Europe, we continue to see our high velocity land and expand business perform very well, be very predictable like it has been quarter in, quarter out. And I think that's one of the unique differentiators about our business is that our customers become large customers over the course of a number of smaller deals. We don't rely on significant large deals to deliver our growth.
Jennifer, we were talking to Tom Siebel yesterday of C3 AI, and what he's doing is kind of interesting. He's switching from a subscription-based business model to a consumption-based one. He thinks that is the wise move to do in this environment when budgets are getting an extra look, as you talked about some of those larger deals. Is that something that you have considered or would consider in the current macro environment?
We're always looking at different pricing models, but what we've seen with our per-seat pricing model is that developers who are among our primary buyers are very resilient to fluctuations in the macro environment, and there's still a pretty significant talent shortage where tech talent exists. There are more jobs open than there are capable developers, and again, with most of business moving online, it's important for our customers to try and improve the productivity and the efficiency of their technology teams, and at the same time return those teams to doing the innovation work that delivers the great customer experiences like we heard about on Lululemon, which is a PagerDuty customer. So while we're always contemplating different pricing models, I don't think it's a one-size-fits-all thing, and I think it kind of depends on the product and the buyer, and in our case, the per-seat model has worked very well for us.
Hey, Jen, it's great to have you back. You know, some are trying to retrace the moment at which software began to get more worrisome. Some argue it was some ServiceNow comments about lead cycles in Europe. And I know international is a quarter of revenue. I mean, can you just give us a sense of how you're feeling about that area of the world in the next 12 months?
Yeah, we're obviously watching the macro very carefully, and the U.S. dollar is strong, which means the IT euro doesn't go as far as it used to. But at the same time, we see really strong demand in those markets and have a customer base there that is, like I said, going to continue to invest in priorities that are mission critical to their business operations and their business outcomes. And that's where PagerDuty has truly become essential infrastructure for our customers. One thing that's not changing is the tailwinds that we've talked about in the past: cloud adoption, DevOps transformation, and digital acceleration remain well and truly intact. And I think that's what's driving the strong demand. We also are seeing great performance in our other regions, and we have a very diverse customer base. We don't have a lot of concentration in any specific vertical, and that's helped us to continue to be a very consistent, strong performer over the last several quarters.